Ever wonder who invented banking? The story goes back 4,000 years, and the first bankers weren't bankers at all. In ancient Mesopotamia, inside the walls of sacred temples, priests managed something far more important than rituals. They managed grain. And that simple act helped create one of the most powerful institutions in human history, the bank. To understand how, imagine yourself as a farmer in ancient Sumer. You've had a good harvest and ended up with a surplus, a sign of prosperity, but also a source of anxiety. Your mud brick home can't protect it. Thieves, pests, fire, even floods could wipe out your wealth overnight. So you turn to the safest place you know, the temple. The towering ziggurat at the center of your city isn't just a religious site, it's the heart of political and economic life. Temples were secure, organized, and trusted, so thousands of farmers brought their grain there for safekeeping. This wasn't just storage, it was the world's first bank deposit. The priests needed a system to manage these communal assets. When you arrived, a scribe measured your grain and recorded the details on a wet clay tablet using cuneiform writing. This small tablet acted as your receipt, a durable record of who you were and how much you deposited. But it also became something revolutionary, a claim on real assets. This idea that a symbol could represent physical value became the foundation of representative money. Suddenly, trade became easier. These clay receipts could be exchanged, traded, or used to pay debts. The temple had become more than a warehouse. It was now a financial intermediary, moving capital through the city. As the priests oversaw the granaries, they noticed something important. Most of the grain just sat there. Deposits came in, withdrawals went out, but huge reserves remained untouched. This idle surplus presented an opportunity. Meanwhile, others in the city needed resources. Farmers hit by floods, craftsmen needing materials, merchants planning distant expeditions. The priests realized they could lend out some of the stored grain to those who needed it. But lending came with risk. Borrowers might fail or be unable to repay. To cover this uncertainty, priests charged a fee. Interest. Borrow 10 sacks of grain, return 12 at harvest. This interest protected the temple and strengthened the community's economic resilience. This system wasn't informal for long. By the time of the Code of Hammurabi in 1792 BCE, loans and interest were fully regulated. The laws set maximum rates, defined terms, and even offered debt relief after disasters. From these ancient temples came the essential mechanics of modern finance: deposits, receipts, loans, and interest. The engine that began with grain in Mesopotamia is the same one powering mortgages, credit, and global banking today.